So this is 2017 question 7. It's a 100 mark tabular statement. So the first thing you need to do here is you need to rule out your tab. So you need one column over here. That's where you're going to list all your assets and liabilities. Then you're going to have your opening balance. That's coming from the balance sheet in the question. Then you have one column for each month of the year, and then a total column. So it works out at 14 columns along the way. And then you start filling in the information here. You're going to list your assets at the top and your liabilities at the bottom. So for that, you're going to look at your question. And this is the question here. So straightforward enough, you're going to pop in your assets. So you're going to start off with land and buildings at €630,000, and then you're going to have underneath that in your tabular statement accumulated depreciation on land and buildings of 25, and you're going to show that as a minus. Okay, so you're not putting in the net book value, you're putting in the cost minus the depreciation. Then you've got your vehicles, you're going to have 50,000 at cost. Underneath that then you're going to have 27,000 as your depreciation. Equipment the same, 15 minus 3 underneath it. Your stock, straightforward, is €73,000. That's going to be an asset. Now debtors you need to be careful of. So this is, you've got €86,400, and that's your debtors figure less to provision. Okay, so it doesn't tell us how much the provision is, and for tabular statements you need to make sure that you have your provision and your debtors shown separately. So if we know that this figure here is less the 4% provision, that means that figure there is your 100%, which would be your debtors, minus the 4% provision. So that 86,400 represents 96%. Okay, so into your calculator, 86,400 divided by 96 multiplied by 100 will give you your debtors figure. So your debtors figure is, I'll just do it right here, debtors is 90,000, and our minus our total that we have there, 86,400. So that means my provision is 3,600. Okay, so the figure that we're given in the question is 86,400. We know that's with the provision taken out. Okay, so if that represents 96%, our debtors figure works out at being €90,000, and my provision is €3,600. Okay, so that's all of my assets. So your assets that go into your tabular statement are coming from your fixed assets and your current assets, and then your liabilities are going to be all these things. So you've got creditors, bank, VAT, expenses due. Then for your share capital, you're only going to put your issued in. We don't really care about the authorised, so you're just going to put the €560,000 in. Share premium of €30,000 and profit and loss balance of 109. So they're all going to go in my liability section, right? Share premium, just a reminder of what that is. So the ordinary shares are worth €1 each. So if someone pays $1.20 for a share, €1.20, the €1 will go towards the share capital, and the 20 cents then will go into share premium, and that's how it works out. And you'll come across this in these questions. Okay, so that you're getting your information from the balance sheet, and we'll just have a look now and see what that looks like in the actual solution. So I'm doing this because if I do it in my handwriting, it'll be way too small and you won't be able to see it on camera. So I'm just using the solution. So what you need to do is you pop in all of the assets and liabilities from your balance sheet into, I'll actually just move that over so I can have the balance sheet. You put all your assets and liabilities into your tabular statement, okay, and you're going down, okay, in a vertical manner, okay. So the first thing, land and buildings, is €630,000. That's what I said here. Then we've got minus your depreciation of 25. That's coming from here. We've got our vehicles of 50. There we are. Minus 27 in depreciation. Then we should have 15,000 minus 3,000. Stock is 73,000 given to us in the question, and our debtors is 90,000. So I'm putting this 90,000 that I've already calculated in, showing my provision as a minus underneath it. Okay. Then goodwill, I've got a little asterisk there beside that. We're going to come across that in the question. So at this point you will have a blank line there. So always leave two blank lines here and 2 blank lines on your liabilities, just to give yourself space if any other assets or liabilities come up in the question. So you should only have down as far as bad debts provision, and then leave 2 spare lines, and then you'll have your total assets, okay? So add them all up, we should get €799,400, okay? Then we will have our liabilities, okay? You don't have to start off, so they start off with the finance by section and end with the current liabilities. You don't need to do that, you can do it the other way around, it doesn't matter what order this is in. Also, revaluation reserve, I have an asterisk beside, and I have an asterisk beside rent receivable. You can't see that. Rent receivable, I have an asterisk beside as well. The only reason for that is because, like the goodwill, you only come across them in the question, so they can both be down the bottom. So, as I said, always leave 2 lines. So you should have your share capital in of €560,000 coming from the question here. Then you should have your share. They'll have share premium of 30. That's coming from here. Profit and loss balance of 109. That's going in there as well. Then they go for their current liability section. They've got 54 in the creditors. Bank of 32. So bank being in a liability, that means it's a bank overdraft. Okay, so if you want to write bank overdraft there, you can. But just you need to make sure that you're doing your pluses and minuses right. Then you have your VAT of 8,400 and expenses due of 6,000. So you should have all of these, and then you can have revaluation reserve and rent receivable at the bottom if that makes more sense to you. Okay, because you won't know at the start of the question that you're going to have a revaluation reserve or that you'll have rent receivable. Okay, and that is the starting position. That's all your figures in your tabular statement, and then you're going to work through each month and you're going to fill them in as we go. So we'll look at January 1st, then February, and so on, and you'll see the process now as we go through. So we are now ready to start working through the problems or the transactions, we'll say, that happened throughout the year. So we're starting off with January, and it says that Delaney Limited decided to revalue land and buildings on the 1st of the 1st 2016 at €800,000, and the land element of this new value is €110,000. And the first thing I'll say to you there is, don't worry too much about that second part. The land element of the new value is €110,000. That's only telling us that for when we're calculating depreciation later on. So we're going to start off, you know how to do a revaluation, you've done it loads of times in question 1. So we're going to start looking at the current value. The current value is €630,000. The revalued amount then is €800,000. So we're going up there. So it's an increase of €170,000. Okay. So we were valued at 630,000. We're going up to €800,000. So that means we've got an increase in value of €170,000. So that's going to be important for us to know. Now you also know that when we revalue an asset, all of the depreciation, all of the previous depreciation gets written off as well. Okay, so in this question, our land and building depreciation was €25,000. Our accumulated depreciation at the start of the year. So we're going to bring all of that depreciation down to 0. Okay, now we're going to remember double entry reval reserve. Okay, so we've got a revaluation reserve. And what goes into the revaluation reserve is the increase plus the depreciation. So we've got the €170,000 increase, plus the previous depreciation of €25,000. So our revaluation reserve figure is €195,000. So what's going to happen here is when I go to the tabular statement now, I need to increase the value of my land and buildings by €170,000. I need to get rid of all my depreciation, and I need to create a revaluation reserve. So let's look and see how that looks in the tab. Okay. So the first thing I said I needed to do was increase my land and buildings. So as you can see there, they were worth €630,000. We're increasing the value by €170,000. Okay. So the land and buildings is gone up by €170,000. Okay, so you're adding it in. Depreciation was minus €25,000. How do I get minus 25,000 down to 0? I need to add on 25,000. Okay, so they cancel each other out. So it was minus 25. I've added on 25. So the net figure there is going to be 0, which is what I want. I want no depreciation on those land and buildings. Okay, so that means my total adjustment to my assets was €195,000. The 170,000 plus the 25,000, which is €195,000. So we need to have an entry in the liability section of €195,000, because the rule is if there's an increase in an asset, there either needs to be a decrease in a different asset or else an increase in a liability. So that means we've got no decrease in any assets here, so that must mean we have an increase in a liability somewhere in this question. And look down here, we do our revaluation reserve. Now, I have the asterisk beside that because you wouldn't have had that when you were doing out when you were listing them all at the start, so you might have that down here, and that's absolutely fine. Okay, so my revaluation reserve is my double entry of €195,000. So you can see there that I'm adjusting the assets by €195,000, but I'm also adjusting the liabilities of €195,000, and that's what you want as you go along. You want the adjustments to be the same. Okay, so €195,000 is changing in the assets with a corresponding 195 in the liabilities. Okay, so I'm increasing my buildings by 170,000. I'm getting rid of my depreciation by adding it back in because that's a minus. So I need to add it in to cancel it out. And then my corresponding entry is I'm opening up the revaluation reserve of €195,000, and that leaves them equal. And that's all you have to do for that. So we're now looking at February, and there's actually a good bit going on in this one. So let's have a look. We need to read this carefully. There's a lot of things that we need to be looking at here. Okay, so it says Delaney Limited bought an adjoining business on the 1st of the 2nd, 2016. Okay, so February, which included buildings at €180,000. So we're after getting a new building worth 180,000. So that's going to go into buildings. We got equipment worth 50. So that's going to be added into equipment. We've debtors worth 12. That's going to go into debtors, and creditors of €20,000. So when we bought this business, all of these things came with it. Okay, so you need to put those straight in. Okay, then it says the purchase price was discharged by granting the seller 200,000 shares in Delaney Limited at a premium of 20 cents per share. Okay, so we know that the shares are worth €1. Okay, so the seller was given 200,000 shares at a premium of 20 cents. So they paid 120. They were given shares worth 120. Okay, so we're going to have an adjustment here to our ordinary share capital and our share premium. Okay, but we also need to double check and see, was there any goodwill with this business? Okay, did we spend more on the business than what it was actually worth? Okay, so this is what you need to do. You need to put in everything that came with the business, then you need to sort out the shares and the share premium, and then find out was there any goodwill. Okay, so there's a few different steps in this, so we'll go through the working now. So before we can find out if there was any goodwill with the business, you need to find out how much, what was the value of those shares that we gave the seller. Okay, so he was given 200,000 shares. Okay, so they were at €1 each, and they're the ordinary shares. Okay. So that was €200,000. Okay, and the shares that were given had a premium of 20 cents per share. So if there's 200,000 shares and there was a premium of 20 cents for each share, that means the premium was €40,000. Okay, so the value of the shares that he was given was €240,000, and what that means basically is we bought a business, but instead of giving money for the business, the person that we bought the business off was given shares in our company. Okay, so he's given 200 ordinary shares at €1 each, valued at €1 each. That brought the value to €200,000, and then the premium was they were worth 20 cents above their value. So 200,000 shares at 20 cent premium per share, which is worth €40,000. So our total value is €240,000. So now I'm ready to check and see if there was any goodwill. So add up your assets. Our assets are the buildings of 180, the equipment of 50, the debtors of 12. Okay, so we had assets when we bought the business of €242,000. So the assets all together added up to €242,000. The liabilities only had the one, which is the creditors of €20,000. Subtract that away. Okay, so the net worth of the business was €222,000. So net worth. And we actually ended up giving shares worth €240,000 for something that was only worth €222,000. So the purchase price, we'll say, was €240,000. So there was goodwill. Okay, so my goodwill figure is €18,000. Okay, so first thing I did was calculate what was the total value of those shares that we gave the seller, €240,000. Well, when we bought the business, it had assets worth 242,000 and liabilities worth 20,000. So that means the net worth was €222,000. We ended up giving shares worth 240 for something that was only worth 222, which means there was goodwill there. When you pay extra money on something, it's called goodwill. Okay, when you pay over the value of the business. So €18,000 goodwill. So there's a few different things that need to go into this tabular statement. So let's have a look. The first thing I said you needed to do was add in all of the things that came with the business, which is the buildings, the equipment, the debtors and the creditors. Okay, so now I'm going to reveal this. So buildings of 180, they were added in. Okay, they came with the business. Equipment worth €50,000, that came with the business when we bought it. Debtors worth €12,000, that came with the business when we bought it. And the creditors of €20,000, so they came with the business. Okay, as well as that, we have the goodwill that I just calculated at €18,000. Okay, so that's going in there. We know that goodwill is an intangible fixed asset, so that's why it's going into the asset section. So €18,000 going in there. And then you need to also adjust the shares. Okay, we issued more shares. We issued shares worth €200,000. So that's going in there. And we had a premium of €40,000. Okay, so that's all of the entries gone in. So we've added this up. At this point, you're like hoping that your assets, your totals will be the same. Okay, I'll just push this up. Your total should end up being the same. So 180,000 plus 50 plus 12 plus 18 gives you €260,000. And your 200,000 in your share capital plus your 40,000 share premium plus the creditors of 20 also give you 260. So you're ready to move on. That's what you're hoping for, that they'll add up to the same amount. Okay, so this is your balance sheet, so they should be balancing as you go along. So transaction 3 was March. Management decided that the provision for bad debts should be increased to 6% of debtors at the end of March. So the first thing you need to do is you need to find out, well, what was the debtors figure at the end of March? How much was owed to us from our by our debtors? So we had €90,000 at the start of the year. Plus, remember when we bought that new business, there was 12,000 worth of debtors that came with that. So at the end of March, the total debtors figure was €102,000. Okay, we're setting the provision at 6% of that. So 6% of those €102,000 will not be paid to us. So we're erring on the side of caution and setting money aside. So 6%. Okay, so that's €6,120 is the new provision. Now, is there an old provision? Yes, there is, because we calculated at the start of this question. So the old provision is €3,600. Okay, so at the start of the year, or the old provision was 3,600, we're increasing it to 6,120. So we've got an increase there of €2,520. Okay, and that would usually be an expense in the profit and loss. Okay, if it was a decrease, then it would be a gain. Okay, so we're going to need to adjust the new provision and we need to adjust the profit and loss. So this will be the first time of you seeing how to adjust the profit and loss. Okay, so let's see how this works in the tab, how we're going to show it. So at the start of the year, we have a provision there of €3,600 and we need to increase that provision. So we're increasing it by €2,520 here. Okay, so if we already have 3,600 and we add in another 2,520, that brings our total provision up to €6,120. So we had 3,600, we put the increase in there, which brings my total provision now up to the 6,120, which is what I calculated in the workings. And the double entry for that is, it would usually be the increase or decrease will be shown in the profit and loss account. There's only one figure here for the profit and loss. So any adjustments for profit and loss are going to go in here. If you are increasing your provision, that's more money going out of the business. So you're decreasing your profit. So if you're increasing an expense, you're decreasing a profit. So if you had an expense of, we'll just say a standard insurance, if your insurance is increasing, that's money going out, so that's your profit going down. So likewise, if you're increasing your provision, that's more money going out of the business, so it's decreasing your profit. So we did have a profit of €109,000 and we're decreasing it there because of the provision. Okay, you don't even need to label why that is. Okay, you're just showing one transaction. Okay, so it's just one figure that we're adjusting for the total profit and loss. So that's your double entry done then. We have 2000, a minus 2520 up here, and we also have a minus 2520 here, which is what we want. Okay, so we're now on April, and it's telling us that we purchased goods in April on credit for €14,760. So as soon as you see on credit, you know that we haven't paid for them yet, so that's going to be a creditor. We're looking at how transactions affect the balance sheet. So we're going to have to adjust stock, okay? And then there's also VAT included in this figure. So this included VAT of 23%. So we purchased goods for 14,760 and that included VAT. So the 14,760 is our VAT inclusive figure. So that represents 123%. Okay, you need to find what the cost price is, what the actual value of the purchases is without VAT. So that's going to be 100%. So into your calculators, 14,760 divided by 123 multiplied by 100, and that gives us our cost price of €12,000. So we have to pay our creditor €14,760, but the purchases are actually worth €12,000. And the difference then of those two figures is €2,760, and that is VAT. Okay, and I just want to show you this quickly in T accounts, and you don't have to do the T accounts out, but this is just to help you understand why I'm adding and subtracting or debiting or crediting. Okay, so we've got a VAT account, we've got a creditor account, and we have a purchases account. So the two that you'll be easiest to get your head around will be your creditors and your purchases, because you know those rules. That then is the little bit more confusing one. Okay, so it's a purchase, right? We have made a purchase of €12,000. So they go in at cost price. Okay, so purchase / stock. Okay, stock's not really an account. It's a physical account, but we are showing the effect on the balance sheet. We're not doing the profit and loss, so I'm putting it in. I'm just writing stock there so you know that the purchases will be shown as stock in the balance sheet. Then we owe our creditors 14,760, and that means the double entry is going to be €2,760 on the debit side. Okay, the balance at the start of the question was 2,400 on the credit side. So we are going to have a minus when we get to the VAT. So you'll see this in a minute. So basically what that means is we paid €14,760 to a creditor for something that was only worth €12,000. So we're basically due a refund of VAT of €2,760 because of the way the VAT works. Okay, so we owed €8,400, but we're after paying €2,760 in VAT, so the net figure is going to be what we actually owe. Okay, so we no longer owe €8,400 in VAT because we're after paying for purchases with €2,760 worth of VAT included. So the net figure is our VAT. So, but don't get too hung up on that. Okay, so we'll show you what it looks like then in the tabular statement. So we are going to have our purchases is the first thing that goes in. So we bought goods worth €12,000, so that's going to increase the value of our stock. So 12,000 straight in there. At the start of this question, we had €73,000 worth of stock plus the other 12,000 that we're just after buying. So then, like obviously, if this was the end of the question, then we'd have our total here, but we could have more adjustments. Okay, the double entry is we've got our creditors. We have creditors of €14,760, so we are now owing another €14,760 to our creditors. And then the VAT, we have a VAT balance of €8,400 as a current liability, and we're reducing that by the €2,760 as I explained with the T accounts. So it ends up being a 12,000 increase in your total assets and a 12,000 increase in my total liabilities, and that is what we're looking for. Always they need to balance. Okay, so if you were to get confused, say, and have your 14,760 here, just say you were really confident and you knew that that was 12,000 and that was your 14,760, and you didn't know that whether this is plus or minus. If you added it in, they wouldn't have balanced, so you know you need to subtract them. So €12,000. So there is no May in this question, so we're going straight into June, and it's worded as we received a bank statement on June the 30th showing a credit transfer received of €7,200 to cover 8 months rent received in advance from the 1st of June. So we got €7,200 into our bank account for rent received, okay? And we also had a direct debit of €4,800 to cover security costs. So we've got money coming in and we've money going out. So the one thing that we need to do in our workings is find out the net figure. So we had €7,200 coming into us, that's money in, credit transfer to us, of €7,200, and we had a direct debit, so money was taken from our account for security, so that was a minus. So we had a plus 7,200 from the credit transfer and a direct debit of €4,800, which means overall we had a €2,400 coming in. Okay, so we had a plus €2,400 into the bank account, and you're going to show that in the bank account, and you're just going to show the full amount for the rent received and the full amount for the security costs. Okay, you're going to show the double entry, and then we're going to tidy it up. You'll see me tidying it up when we get to December. Okay, so for now, just move that over there. We are just going to show the following. Okay, so in this question, they've shown 2 separate figures for a bank. You don't worry about that. I'm showing you how to do it just using one figure, and you'll still get the 4 marks, so don't worry about that. Okay, so I've shown you in the workings that we've got €7,200 coming into our bank account and 4,800 going out, which means that the net figure is we're going to have €2,400 coming in as a plus. Okay, so if you've got €2,400 plus money coming into the bank account, that's going to reduce your bank overdraft. So instead of showing those 2 figures, you're going to show, I'm just going to do it up here, but it is actually the bank. You're going to show a reduction in your bank overdraft of €2,400. Okay, so this is minus €32,000. We've got to 2,400 coming in, so it's reducing that overdraft. Okay, so that's what minus €2,400. Then you're going to show your double entry. Okay, so we've rent receivable. Someone is paying us money in advance for something that hasn't happened yet. That's not good for us. We technically owe that money back to them, so that's why it's a liability. So the €7,200 is going in as rent receivable, and you'll see me now tidying all those figures up in December. So you're just putting the full figure in for now. Okay, the the other one then is your expenses due, your security costs. So we have paid €4,800. So there was 6,000 due at the start of the year. We're after paying €4,800. So that's why that's a minus there. So we've got a minus 2,400, minus 4,800, and we've a plus 7,200. So it ends up at nothing. Okay, so there's no real adjustment in the balances. And here, obviously we didn't make any adjustments up here, so you should have a 0 there as well. Okay, that's the first time you've seen 2 zeros. So there was transactions that happened, or there was adjustments, but just worked out being a 0. Okay, and we'll come back to these two, the expenses and the rent, in December. I'm now looking at July, and it says paid by cheque a creditor account balance of €1,800 and received a discount of €100. So what that says is we owed €1,800. The balance on the account was €1,800, and we received a discount of 100. So if we owed 1,800 and we were given a discount of 100, that means we paid €1,700. Now I'm not going to show you, you don't need to do any working for this really, so I'm just going to show you the answer, right? So we'll talk through it. We have the July figures, right? First thing we need to do is we don't owe that creditor any money anymore, so I'm reducing the creditor down by the full amount of €1,800, which you can see here. Creditors, €1,800 minus, okay? We no longer owe that 1,800. The double entry is my bank, €1,700 came out of the bank account. Now this is a liability. This is a bank overdraft of €32,000. This is money coming out. So if you're paying money out of bank overdraft, you're going to increase your bank overdrafts. That's why it's a plus there. So just be careful of those plus and minuses. Then also we got a discount of €100, and that would usually be an income in the profit and loss, or a gain. So we are increasing my profit and loss by €100. So again, I've got no adjustment up here in the asset section, and I end up working out at none down here either. Okay, because we've got a plus, and a minus. All right. So the full amount is being reduced in the creditors. We're increasing our current our bank overdraft by paying a creditor. So €1,700 is going to increase my overdraft because I'm actually paying more money that I don't have. And we also got a discount, so that's going to increase the profit and loss by €100. Okay, so I'm now on August, and there's quite a good bit that's going on in this transaction, so just be careful, make sure you're keeping an eye out for everything. So it starts off by saying a payment of €900 was received from J. Barry, a debtor whose debt had been previously written off. So we have a bad debt recovered, and we were paid €900. The €900 represents 60% of the original debt, and Barry has undertaken to pay the remainder of the debt. So we've seen this before in question ones. We were paid €900 into our bank, right? And that represents 60% of the debt. So what you want to find out is, well, what was the full debt when the debt was written off initially? So that would be the 100%, and that's the full debt. So if we know that €900 represents 60%, into your calculator, 900 divided by 60 multiplied by 100, which will give us the full debt, which is €1,500. Okay, which means he is still due to pay us €600. Okay, and he's still to pay. He said he's paid us €900. That represents 60% of the debt, and he's going to pay the rest of it, which was €600. Okay, which is, if you want me to write 40%, but you don't need to write that if you don't want to. So €900 will go into the bank, right? So we've been paid that, so we need to show that in bank. The full debt is what's known as a bad debt recovered. So that business has come back to life. They're going to start trading with us again. We've recovered the full amount of debt. That usually goes into the profit and loss. So we're going to have to show that in the profit and loss. And the €600 is still owed to us. What do we call someone who owes us money? It's a debtor. So that's going to go into our debtors. Okay? And that's the first bit dealt with. Now, that would be fairly straightforward if that was the only thing, but because we have another part in this, we need to look and see what other adjustments we need to do. It says, on the same day, goods to the value of €369 were sold on credit to Barry. So obviously because it's a bad debt recovered, they trust him again and they're allowing him to buy more stuff off them. Okay, so we sold stuff on credit to Barry for worth €369. This includes VAT at 23%, and a markup on cost of 20%. Okay, so there's a bit going on. So we're going to start off by finding out what the VAT figure was. Okay, so we know that the VAT inclusive figure is €369. Okay, basically he has to pay €369, and included in that €369 is VAT and his profit as well. Okay, so the 369 is the amount that he has to pay. And we know that the rate of VAT is 23%. So that represents 123%. Okay, so you need to find out what was the VAT figure. Into your calculator, 369 divided by 123 multiplied by 23, which will give you €69, and that's the VAT figure. Okay, so if the VAT inclusive figure is 369, and we know that of that 69 was VAT, that means before any VAT was added on, they were worth €300. Okay, so that's the VAT exclusive. Okay, now we need to find out what they actually cost us. So the 369 included VAT and profit. So we know that the VAT is 69, so that's the cost price plus the profit. Okay, so that's the selling price of 120%, because we know that that's €300 represents the cost price plus 20% profit. So that €300 represents 120%. Okay, so into your calculator, 300 divided by 120 multiplied by 20 to find what the profit was. So the profit was €50, which means the cost price was 100%. So the cost price was €250. Okay, so basically we bought goods in worth €250. They're sitting in our stock at €250. We wanted to make 20% profit, which is €50. Okay, so that brought it up to 300. And then we had to charge VAT at 23%. So we charged another €69 on VAT, which brought the selling price, or the amount that Barry had to pay, was €369. Okay, so let's see what has to go in where. Okay, so VAT is going to need to go in. Okay, I'll put an asterisk. So we need to put in VAT. We need to put in the profit, and we need to take out of our stock the amount of the goods are worth. Okay, so we're starting off by we'll start off with our bank, but sorry, as well as that, he said he was still going to owe us he was going to pay back the €600, plus he's after buying more stuff off us worth €369. Okay, so I'm going to show you now what we need to do in the tab. Okay, so we start off with our debtors. Okay, he owed us, he said he was still going to pay us back that €600. Okay, plus he bought more stuff worth €369. So you can see here that they have two separate figures. You don't need to show two separate figures. Add them together. 600 plus 369, which is €969. 969. Okay, so you don't need to show separate. I think it gets too confusing if you're showing two figures in there. So €969 is added into our debtors. That's owed to us. Okay, we sold him stuff. Okay, worth €250. That's taken out of our stock. So minus 250 coming out of our stock. Okay, then down here in the bank, we received a check. We received a check of €900. Okay, so when you receive money, it reduces the bank overdraft. So that's why that's a minus. Okay, so we've gone through that one, we've gone through this one, and we've gone through that. Okay, then our VAT. Okay, I can show you in T accounts why we are adding on the VAT. I'll do it quickly here. We have sales, we have debtors, and we have VAT. So our sales are always on the credit side, and the sales were worth €300. Okay, debtors, he's going to pay us 369. So that leaves the double entry as €69 in the VAT account on the credit side. And we're already in a liability account, so that's why it's a plus. So you're adding it into the VAT account. So you've got 69 going in here. You're increasing your liability. All right. And then here in your profit and loss, we have a full bad debt recovered of €1,500, which I labelled when we were doing the working, plus the €50 profit from selling the goods to Barry. Okay, so you're just showing the profit. You don't need to worry about the sales price or the purchase price. You're just putting in the profit. So how does it affect your profit? We've got 1,500 of a gain, and we have a profit of €50 on the sale. Okay, so that leaves us then with 719 in the liabilities and 719 in the assets. Okay, so we're on September now, and it says we received €50,000 from the issue of the remaining shares. So you need to check and see first how many shares were there remaining. Well, you start off by looking at your authorised amount, because you can't go any higher than the authorised amount. The authorised amount of shares was €800,000 worth of shares in this question, or 800,000 shares. And we already issued how many? Well, you need to check your tab. Okay, so we had the 560,000 at the start of the year, plus the 200,000 that we issued when we got the new business. So we already issued 760,000 shares, which means that there was 40,000 shares remaining. Okay, so the remaining amount of shares was €40,000, and they're valued at €1 each. So they are worth €40,000. Now we were paid €50,000. Okay, we're paid €50,000. The shares are worth €40,000. So when you pay more than what the shares are worth, that is known as your share premium. So we had a share premium there of €10,000. Okay, so into your tab, you're going to have the 10,000, 40,000, and you're going to have money going into your bank as well. So let's have a look and see how that looks. So we're now on September. We have €40,000 going into the share capital. Okay, so we're increasing our share capital by €40,000. Okay, we're increasing our share premium by €10,000, and we've got money coming into our bank account of €50,000. And if it's money coming in, it's reducing the bank overdraft. So that's why it's a minus. So money coming in is a minus in your bank overdraft. So you're reducing your bank overdraft because it's money coming in. Okay, so we've got 40 plus 10 is €50,000. That's plus 50 minus 50 leaves us with nothing, and that's why we also have nothing up here. And that's that working done. We're now on October, and it says goods previously sold for €738 by Delaney Limited were returned. So we got returns. This figure includes VAT at 23% and a markup on cost of 20%. So similar to that working that we had in August. So Delaney issued a credit note for €700 due to a delay in returning the goods. Okay, so they were obviously a bit late returning the goods to us, so we didn't give them a credit note for the full amount. But we need to work backwards and see how much the VAT was and find out the cost price. So similar to the steps that we had in August. Okay, so we're going to start off by the final figure that was given, that was paid, was €738. So the €738 is your VAT inclusive figure. Okay, so that is your 123%. So to find out what your VAT was, it's going to be 23%. So into your calculator, 738 divided by 123 multiplied by 23, which gives us a VAT figure of €138, which leaves the cost before VAT, or the selling price before VAT, as €600. Okay, so that was your selling price, which is your 100%. Okay, so well, it would be your 100% before the VAT was added on. Okay, so we know that that figure there includes a profit of 20%. So my selling price was €600, which is, I'm carrying this up. Okay, so that was the cost price plus a profit of 20%. So that's 120%. Okay, the profit was 20%. So into the calculator, 600 divided by 120 multiplied by 20, which is my profit. I'll just write that there, which works out my profit being €100. So that means those goods cost me, my cost price of 100% was €500. So basically, if we just think back to when we actually sold these goods, just say they were tables, right? We bought tables in worth €500. Okay, we then stuck €100 profit on them. Okay, so the selling price before any VAT was €600. Then we had to add VAT on at 23%. So we added another €138 on, which means that the person that was buying them actually ended up spending €738. Okay, so that's what those figures mean. So we issued a credit note worth €700. We didn't issue the full credit note of €738. We obviously charged, well, like similar to a restocking charge or a late charge. Okay, so let's see what this looks like in our tab. Okay, so we've got October here. So the first thing is we got our stock back. So when someone brings something back to us, that means we get it back. So we sold these tables earlier on in the year, and now they're sent them back to us. So the tables are now back included in our stock, and stock must be valued at cost price or net realizable value. So the cost price is €500. So I'm adding €500 into my stock. Okay, I'll just move this over so you can see what's actually been adjusted as well. Okay, so €500 is been added into stock, right? Then you issued a credit note of €700. Okay, so they no longer owe that €700, so you're decreasing your debtors by €700. Okay, so you're decreasing your debtors by €700. The next thing I'm going to look at is VAT. Okay, can you see this? Yeah, so the VAT figure, our VAT liability is going to decrease because we got these returns. Okay, we no longer owe that VAT, so that's why that's a minus. So you're decreasing, your VAT liability is decreasing by 138. Okay, and then the 62, well, where does that come from? So we should have given a credit note for €738. Okay, but we only gave a credit note for €700. Okay, so we're up €38. Okay, but I'll just pull this copy back over here. Remember, we should have been earning a profit of 100. So if when we sold them, we would have recorded a profit of 100, and now that we're getting them back, the profit should be going down by 100, okay? So the profit should be going down by 100, but because we only gave a credit note of 700 instead of 738, we're technically up €38. So our profit should have gone down by 100, but we held on to €38. So 100 minus the 38, because we held on to that, means that our profit only actually decreased by €62. Okay, so that's why we have €62 coming out of our profit and loss here. Our profit is being reduced by 62. So the 62 is our profit should have gone down by 100, but we held on to 38 because of the delay in them sending back the goods. So our profit ends up only going down by €62. Okay. And that's that one. Next is November, and it's a creditor who was owed €4,000 by Delaney. That's us. So we owed someone €4,000. They accepted equipment with the book value of €3,200 in full settlement of a debt. So we owed them €4,000 and they accepted something worth €3,200. So that means we received a discount. Okay, so we owed them €4,000. They took something worth €3,200. Obviously, there we got a discount of €800. Okay, and the equipment cost us €5,400. So when we first bought it, the equipment cost us €5,400, but now it only has a book value of €3,200. And remember, when we get rid of an asset, we need to take any of the depreciation that goes with it out of the accounts. Okay, so let's try and figure out how much depreciation there was. Well, if it cost us €5,400 when we first bought it, okay, minus the accumulated depreciation will give us our net book value. Okay, so minus the accumulated depreciation, which was what I'm trying to find out, and I know that the net book value is €3,200. Okay, so that leaves me with €3,200. So work backwards, 5,400 minus something gives me that. So my accumulated depreciation ends up working out at €2,200. Okay, so my depreciation is €2,200, and remember, we owed them €4,000. I'll just write this down for you. They accepted a piece of equipment worth €3,200, so we got a discount of €800. That's my discount received. Okay, so let's see what this looks like in the accounts. We have, first of all, we got rid of a piece of equipment. Equipment is always held at cost price. Can you see this? Equipment's always held at cost price, so we're taking out at cost €5,400 out of the equipment. Okay, then I need to get rid of any depreciation. So remember, depreciation is sitting in here as a minus, so if I'm trying to get rid of it, I need to add it back in to cancel it out. Okay, so I'm adding in that €2,200 that I just calculated in the workings. Okay, then we were given a discount received of €800. That's going to increase my profit and loss. That's why I'm adding that 800 into profit and loss. And also, we owed this person €4,000. We no longer owe them €4,000. So I'm reducing the creditors by 4,000. Okay, so in total up here, I have a minus 5,400 plus 2,200 leaves me at minus 3,200. And in the liability section, then I have a plus 800 and a minus 4,000, which leaves me with a minus 3,200, which is what you want. So you want these two figures to always work out being the same. Okay, so take out your asset at cost price, remove any depreciation, record your discount received, and also record the fact that you no longer owe that €4,000 to your creditors. So we're in December's transaction then. It says the building's depreciation charge for the year is 2% of book value, and the depreciation charge is to be calculated from the date of valuation and the date of purchase, and the total depreciation charge on vehicles then is 8,000. So we're given the vehicle depreciation charge, but we have to calculate the buildings ourselves. Now it says the building depreciation charge is 2% of book value, so don't let that confuse you too much. The buildings at cost, because of the revaluation, is 800,000, and when a revaluation happens, we have no depreciation. So 800,000 minus our zero depreciation gives us a net book value of 800,000. So don't worry too much about that. Now the only thing is, that 800,000, that includes land. Okay, and we're not allowed to depreciate land. It's an accounting standard. You're not allowed to depreciate land. Land does not be depreciated. So if the 800,000 includes land at €110,000, we need to find out what's the building element worth. Well, the buildings are worth 690. Okay, so the revalued amount was 800,000, but that included land. So the buildings on their own are worth 690,000 euro, and we're depreciating that by 2%. Okay, so that is 13,800 euro. Okay, then when we bought the new premises or the new business, that came with a building worth 180,000 euro. Okay, and we're depreciating that by 2% as well. But hold on a second, when did we get it? We got it in February. Okay, so we bought that new business on the 1st of February. So we only had that building for 11 months out of the 12 months this year. So you're not going to depreciate by the full year. You're going to go get 11 out of the 12 months, which means that depreciation charge is 3,300 euro. Okay, and our new, that means our total depreciation is 17,100 euro, and that will go into an expense in the profit and loss. And usually you go plus previous depreciation, but there is no previous depreciation, so that's also going to be taken away from your fixed assets in the balance sheet. Okay, so let's see what that looks like in the tab. Now, don't get too confused. There's going to be some figures here that you haven't seen yet, but we'll deal with them next. Okay, so I'm going to use a highlighter for the ones that we're actually adjusting now. So you can't see that. So I can't zoom out, so you're going to have to just trust me on this. So my depreciation of land and buildings, the 17,100 euro, I'm increasing that accumulated depreciation. So minus 17,100 euro, which actually means that I'm adding it in. So at the start we had a depreciation of 25, then I got rid of 25, and now I'm increasing my accumulated depreciation by 17,100 euro. Okay, then my double entry for the buildings would be an expense in the profit and loss, so that would decrease the profit. So that's why it's a minus down there of 17,100 euro. Okay, now I'm going to deal with the vehicles depreciation. We've got 8,000 euro that was given to us straight in the question. 8,000 euro, that's going to be added in there, and also that's going to reduce my profit by 8,000 euro down there. Okay, we'll now deal with these figures here. I meant to say there that this, instead of putting two separate figures in, because we've been netting them off throughout the question, you can just put in one minus figure of 25,100. So you're adding the two of them together and it's minus 25,100 euro. Okay, and then obviously that makes them add up. Okay, and you might find easier is to have two December columns, because you'll see what I'm going to do now is I'm going to go back to the rent and the expenses due that we had earlier on. Okay, so if you want to have two December columns, that's totally fine. I actually find it's easier, but it's just because I'm doing this on from the solution. But I think that like if I was teaching it in class, I'd have two December columns just so it's a bit easier to get your head around. So the first December column you're using for the transactions that are in the question, and then the second December column is to sort out the charges for the year. So what I'm going to do now is I'm going to go back up to and look at June's transaction. Okay, and we need to find out from those expenses due and the rent receivable that we had, what were the charges that were actually for this year, how many months were for this year from those figures. Okay, so I'm going to start off with rent receivable. Okay, so I'm going to just do it down here. So rent receivable. Okay, it says that we received 7,200 euro to cover 8 months rent. Okay, so 7,200 euro is for 8 months. Okay, and that 7,200 euro is for rent from the 1st of June. Okay, so from the 1st of June 2016, right? So if the 7,200 euro was rent for 8 months in 2016, we're doing the account for 2016. Let's calculate how many months of the 8 were in this year. Well, we start off with June, July, August, September, October, November and December. So that's 7 months. 7 months are actually for this year. 7 months. And the 7 months figure is 6,300 euro, which means that we have 900 prepaid. Okay, so in rent received, we received 7,200. That was for 8 months, and 7 months of them are actually in this financial year 2016. So the charge for the year is 6,300 euro, which means that 900 euro is prepaid for next year. That's the rent. in that one we also had security costs. So we had a direct debit of €4,800, and that's for security costs for the year ended 30th of the 4th 2016. Okay, so security was €4,800, and that's for the year end. Okay, so that's for 12 months basically. The year end 30th of the 4th 2016. Okay, so it's 12 months. 12 months up to the 30th of April 2016. Okay, so we're doing our year for 2016. So if that ended on the 30th of April, obviously January, February, March and April were for this financial year that we're currently doing. Okay, don't worry too much about what happened after that. We're going to go with the information that we're given. So 4 months of that €4,800 were for this year, for the charge for this year. So get into your calculation, 4,800 by 4 over 12, which is 4 over 12. It's €1,600. Okay, so €1,600 is the charge for this here, and this is what we're going to do now, right? So watch what I'm going to do. This would be your second December column if you were using 2 columns. Okay, so I'm going to start off with rent received, which is down here. Okay, which is the very last line here. Sorry, you just can't see it on the video. So rent received, we had €7,200, and of that €6,300 was for this year. So I'm removing €6,300, and that's leaving me there with the balance of 900. Okay, so €6,300 is been taken out because that was for this year, and the double entry is going to be in my profit and loss as a plus. Okay, rent received is someone paying us rent. Remember I said it's like if someone was renting like the apartment above our shop or something like that. Okay, so 6,300 is taken out of the figure below, and you're putting it into your profit and loss. Okay, that's income in our profit and loss. Okay, and then with the expenses due, we had €1,600 of that was actually for this year. So that is going to be, it originally went in as a minus, so we're going to go plus €1,600, and that will, the double entry is our security expense and our profit and loss. That's an expense, security cost. Okay, so again we can have a net figure here of we've got a plus 6,300 and a minus 1,600, which leaves me with a plus €4,700. Okay, instead of putting the two of them in. Alright, so you can see there what I did was I took the charges for this year and I completed the double entries in the profit and loss. Okay, and that's that question done now. All you have to do is your totals. So all of these totals along here should have been done as you were going along. Okay, so all you're left with doing is these totals. Okay, so anything that you need to try and get through them as quick as possible, and pop them in. Obviously you're going across, so you had land. I'll just show you land and buildings, and then the rest of them are all the same. Land and buildings we had at the start of the year 630,000 plus 170 plus 180, which leaves us with a total of 980. Okay, I'll then show you one that has a plus and a minus. Equipment, we had 15 plus 50 minus 5,400, which leaves us with a total of €59,600. Okay, and that's that question done fully. Okay, so the only thing you need to be careful of is, well, not careful of, but you know, where you have in a solution 2 figures, you can just put in one net figure. That's totally fine, and you can have 2 different columns, one column for what I had highlighted in orange and another column for pink. Okay, and that's your question totally finished. In the end you should have these 2 balancing. Okay, so 1,236,099, and that's what you're aiming for in this question.